Welcome to another introductory session of Principal's exciting and vibrant funds, which will provide another promising investment prospect for you and your investors. To start things off, let's look at the overview. Riding on China's rapid economic growth in the last 20 years, here lies the hottest prospect of the next global technology, financial, and real estate hub. It is strategically centered at the heart of Guangzhou and Shenzhen, known as the Guangdong Hong Kong Macau Greater Bay Area Initiative. Here's why the Greater Bay Area could be the new frontier of your client's investment opportunities. In 2018, the combined GDP of the Greater Bay Area stood at $1.6 trillion, and the Chinese government expects its GDP to reach $4.6 trillion by 2030. This is a near tripling of the GDP in slightly more than a decade. This is based on a population of 71 million in a land area of 56,000 kilometers, which is only 0.6% of China's total land area. Hence, this is a highly productive area focused on several key industries and regions to take China into the next level of growth. Comparatively, the Greater Bay Area is expected to overtake the other three global Bay Areas, namely the New York Bay, the San Francisco Bay, and Tokyo Bay. These three Bay Areas have been in development since the late 60s until present. San Francisco's key sector for growth is derived mainly from technology, where Palo Alto, the Silicon Valley of the USA, is located, while New York Bay is the financial center of the USA. Tokyo Bay is a mixture of financial and industrial development hub, which has given Japan the developed nation status since the late 70s. The Greater Bay Area already possesses names that are ranked amongst global Fortune 500 companies such as Tencent, BYD, AIA, and Ping An. These companies will continue to pioneer and lead the region's development in technology, healthcare, financial services, infrastructure, and fintech. The investment outlook of Greater Bay Area is filled with a broad spectrum of potential investment opportunities. Let's look at some of the quick facts on the Greater Bay Area. Greater Bay Area is China's master plan to link Hong Kong, Macau, Shenzhen, and Guangdong into an integrated economic and regional hub. The Greater Bay Area comprises 11 megacities, with the ambition to transform the interlinked cities into a financial and innovation powerhouse. This will be used to rival Silicon Valley, San Francisco, New York, and Tokyo. Let's continue to the next page. Out of the four cities, Shenzhen will focus on innovation, creativity, and technology. It'll also be the forefront for such innovation and economic growth for the rest of China. Next is Hong Kong, which will be the international financial, transportation, and trade center. Hong Kong is also known as a global aviation hub. It was established with a proven track record in the global aviation arena and has been serving as a gateway into China for foreign investors. Macau, meanwhile, is becoming a major tourism destination. In addition, Macau has overtaken Las Vegas as the world's largest gaming center. Its overall rapid development is less than 15 years. Lastly, Guangzhou is the key city of international trade and industry, education and culture as well. Greater Bay Area, comparatively in terms of some of the development statistics, are already quite close to Tokyo Bay, New York Bay, and San Francisco Bay, given that its development came much later. The main lagging indicator is the lower percentage of the tertiary sector to GDP. For the other three better developed Bay Areas, the percentage of the tertiary sector to GDP is more than 80%, in fact, nearer to 90%. This highlights the vast potential for growth. This is the next stage that Chinese policymakers plan for China to be. Services are now the largest part of China's economy, growing to almost 54% of GDP, as compared to manufacturing at less than 40%. This is where the Chinese government is consolidating the service industry, driven by innovation and technology to further drive growth in the region. The next stage of growth for the Greater Bay Area will be underpinned by 6 core industries. The 6 will be the new dynamo coupled with great multiplier effects to drive growth across China. The 6 key sectors are financial, technology, tourism, infrastructure and logistics, healthcare, and green businesses. Hong Kong is the financial center of Asia for many years. There are 2 financial centers in Asia, Singapore and Hong Kong. Hong Kong has always played a much bigger role because of China, which provides the capital flows of the demand for financial services and serving as a conduit into China for the rest of the world. This has made Hong Kong the #1 capital raising city in the world. Hong Kong in recent years has also emerged as the top financial center for issuance of green bonds. Green bonds are bonds issued based on green rules for investing industries or companies. Green rules are environment-friendly rules for investors who are keen on green products. Shenzhen has a very high level of R&D spend compared to the rest of China. This is where the growth, with the Chinese government working to shape Shenzhen into the Silicon Valley of Asia. As an example, California in the year 2018 became the 5th largest economy in the world. This is an incredible achievement because, as at the end of 2017, California was the 6th largest economy in the world. This tells you how fast technology and innovation has driven the growth in the state of California, as well as San Francisco. This highlighted the importance of technology in today's world. The China-Zhuhai and Macau partnership will provide a vast area of tourist visits and arrivals for both Asia and the rest of the world. Based on the projected statistics for arrivals, tourism, and earnings, China is now vying to be the #1 tourist destination in the next 5 to 10 years. Guangzhou is now one of the world's largest transportation and logistics hub. With strategic terminal ports, the Hong Kong International Airports, as well as the cross-border train linkages between Hong Kong, Macau, Shenzhen, and Guangdong, the interlink of transportation will be the hub that converges the cities centered in Guangdong. Infrastructure in the Greater Bay Area will be further upgraded with high-speed rails, cross-border bridges. For example, the recently completed Hong Kong-Zhuhai-Macau Bridge. And lastly, new airports. One may not realize it. Hong Kong possesses one of the best healthcare facilities worldwide. To leverage on this, the Chinese government is looking to establish Hong Kong as the traditional Chinese medicine studies hub as well. Shenzhen houses one of the largest green automobile industries for battery-powered and hybrid vehicles. This has elevated China to be the #1 electric vehicle output country in the world. Development of green vehicles ranks highly on China's to-do list. This would complement the Chinese government's commitment to clean up the environment. The Principal Greater Bay Fund is developed through the collaboration between Principal Malaysia and China Construction Bank Principal Asset Management, based in China. China will be the party in providing the expertise and management platform for this fund. During the construction of the portfolio, there are 6 critical factors to consider, namely quality, growth, momentum, big data, quantitative approach, and sentiment. Balancing the 6 parameters judiciously together would allow the construction of an optimal portfolio with a balance between alpha performance and risk. To illustrate, construction of the alpha model consists of the following 4 criteria, i.e., the fundamentals of the companies and industry. Direction determined by the sentiment of market analysts. Investors' data collected from the internet and technical factors such as price changes, funds flow, and trading volumes. Now, one would probably raise a question regarding the similarity of the existing China funds from Principal. We will highlight the major differences between the Greater Bay Area Fund, the China Direct Opportunity Fund, as well as the Greater China Equity Fund. The Greater Bay Fund will primarily focus on large and mid-cap companies, while the China Direct Opportunity Fund will focus on small and mid-cap names. And lastly, the Greater China Equity Fund will focus on companies in China, Hong Kong, and Taiwan. The other differences will be highlighted as we go along. Next, we highlight the asset allocation breakdown, geographical breakdown, and the risk profile of each fund. For example, the Principal Greater Bay Fund has a slightly higher risk as compared to the Greater China Fund, but lower as compared to the China Direct Opportunity Fund. The Greater Bay Fund will have about 60% of its exposure in Hong Kong and about 40% in China. The Direct Opportunity Fund focuses 100% on China, while the Greater China Fund has exposures in Hong Kong, Taiwan, Singapore, and to some extent, the USA. The Greater Bay Fund will focus on financials and information technology. Both will give your investors almost 50% of the fund, followed by consumer discretionary, as well as real estate. The China Direct Opportunity Fund is far more evenly distributed between industrial, materials, information technology, healthcare, consumer discretionary, and consumer staples. The Greater China Fund is somewhat similar to Greater Bay Fund, with financials, consumer discretionary, information technology, and communication services comprising more than 65% of the fund. Here, you will find the simulated performance of the Greater Bay Fund. The Greater Bay Fund Index outperformed on a 1, 3, and 5-year basis. The year-to-year performance is quite close to that of the HSCEI and CSI 300. Meanwhile, the top 20 names in the simulated index is a combination of some of the largest and fastest-growing companies listed on the HKSE and the Shanghai Stock Exchange. The companies include Tencent, AIA, Midea Group, and Gree Electric. The Greater Bay Fund offers 4 currency classes, namely the Australian Dollar Hedge, Ringgit Malaysia Hedge, Singapore Dollar Hedge, as well as the US Dollar. There you have it. We hope that with this information, you will gain a better understanding of the new Principal Greater Bay Fund. Now, you can help prepare investment strategies for your existing or potential clients to invest with confidence with Principal.